Without further ado, we're going to start with Dino from Momentum Cyber, so you can hear about the current state of the cybersecurity market. I want to ask one thing. I don't want Dino to come up on stage and people are talking, and we have to be quiet. For Dino. Once I'm on stage, you can all talk again. Shh. Dino, come here, Dino.
I'll keep this brief so the talking can resume. So, for those of you who don't know me, Dino, of course, one of the co-founders and a managing director at Momentum Cyber. So we are a exclusively cybersecurity focused advisory firm. So we work with companies all shapes and sizes, essentially helping firms navigate the strategic landscape. So as you think about raising capital, as you think about possibilities for exits, recaps. So really, it's kind of navigating throughout the journey of the company. Usually, it's going to be Series A all the way up through pre-IPO companies that we'll work with. We also work with private equity firms. We work with global strategics on the buy side, so helping them with acquisitions, investments, partnerships in M&A. So this is Momentum. It's not working. Excuse me. They told me I have to stand right here and point right here. It may or may not be working. Maybe it works. Okay, so we gave you the overview of our firm. And for the next, it's not working. All right. So for the next 2 hours, we're going to go through every logo on Cyberscape, beginning in the upper left quadrant with Barracuda. So most of you probably know us from our cybersecurity research. So we put out monthly cybersecurity snapshots, quarterly market reviews, a cyber almanac, the Cyberscape, which this is 1/5 of the companies that we track in our database, and it still doesn't fit on the page. But this is what many of you have reached out to us to ask to be included on as well. So we'll do our best, but the paper is only so big. And before we kind of jump into where the industry is today in terms of strategic activity, I just wanted a quick snapshot of what happened last year, because it was the record-setting year of cyber. Over $100 billion of capital got deployed between M&A and between financing. We had $15 billion plus acquisitions. We had 5 IPOs. We had 130 private equity deals, which private equity used to be the buyer of last resort. That is no longer the case. As I said, over 1,000 financing deals, about 300 M&A deals. So last year really was record-setting. So as you think about what are the trends that we're seeing in 2022, you kind of got to keep that in mind. We always tend to look at the 1 year prior, but I'll show you a little bit of data that can maybe put it in perspective a little bit better. So, quick snapshot when we look back over the past 10 years, we are approaching almost $500 billion that has gone into the cybersecurity industry between financing and M&A. The majority of that has actually gone in over the past 2 to 3 years. Now, when you look at the trends back in 2020, you look at the M&A numbers, they're about $20 billion in the M&A side of things, about $12 billion on financing, microphone swap. About $12 billion on financing. So when you look at the activity that we've seen year to date thus far, so there's a little bit of a blip because the VMware deal obviously throws off the M&A numbers, but we're still at a very healthy pace. And for 2021, obviously we had a record-setting year, but we actually expect 2022 to be very healthy. As I mentioned before, private equity. So if you look 10 years past, private equity accounted for maybe 15% of the deals in the cybersecurity market. Last year, depending on if you look at the number of deals or the amount of money that's gone into the space, they're about 50-50. And these are not, deals that are done at discounted valuations. These are private equity firms that are outbidding strategics, that are making the lives of many corp dev people very difficult. Because they're highly competitive, paying highly competitive multiples, and you're giving a little bit of a flexible opportunity. So when you think about your exit possibilities, people traditionally think about it as well. Is now the right time to sell, or do I want to go bigger? Private equity kind of gives you the best of both worlds sometimes, in that you can take a good portion of your chips off the table in something known as a majority recap, where you get money that comes into the company, you actually get to exit part of your position, and then you play for a bigger outcome. So I think that's one of the appeals of private equity that's actually been fueling some of this. But then there's also been the take privates of many of the public security companies throughout the years. Sorry, there has to be a direct shot to that. So real quick, when you look at the strategics, so over the past decade, there's been a 4x increase in the number of public cybersecurity companies. This doesn't include acquirers that are in the cloud infrastructure space, telcos, professional services firms. On the next slide, and this will be the only question I ask you guys if anyone wants to participate, but on the next slide, we have the top 8 acquirers last year in the cybersecurity industry. And if you look at the landscape here, if you had to guess whether or not there's, let's say, 1 logo from this page on the slide, 4 logos, or all 8 of them were from this landscape. Quick show of hands, how many of you think there's going to be 1 logo on that page? 4 logos on that page. 8 logos on that page. Interestingly enough, there's 1 logo on this page that came from the cybersecurity, public cybersecurity companies. When you look at the top acquirers in this space, Deloitte leads the pack with 5 acquisitions. You have Accenture, Microsoft, WhiteSource, Tesseract, OpenText, Rapid7 is the one public kind of pure play cybersecurity company that's in this leaderboard, MasterCard, and then many others. So the point of this slide is essentially when you think about your strategic acquirer universe, we're not just talking about the usual suspects. There's many out-of-segment buyers, folks that maybe don't normally make the list of partners that you might spend time developing relationships with. But wanted to put this up there so people realize that there's value in building relationships with more than just the great companies that are out there, the Palo Altos and the CyberArks and the others. Those are good relationships to have, but you should think about many more folks in terms of what's possible when it comes to your exit opportunities. Valuations, we get this question all the time. What's happening with valuations? What's going to happen 6 months from now, 12 months from now? So instead of pulling out the crystal ball, we'll just do a quick look back here. When you look at the median valuations in the public markets over the last 12 months, yes, they've come down a little bit, but what's most notable is when you look at the peaks, right? So you're looking at greater than a 50% decline in the companies that were the high flyers in terms of valuation. So it seems like kind of the higher those valuations were, they tended to be the higher growth companies, which, as you know, tend to be most impacted when we're under the economic conditions that we're seeing today. But overall, I'd say valuations went from sky high to maybe a little bit lower in the sky, but still pretty healthy valuations when it comes to the overall markets. Now, these will also trickle into the private markets as well. We'll skip this slide because we just would like to do this. So these will come into the private markets as well, but last data point that I think is worth looking at, there is still a very strong correlation if you look at enterprise value to revenue, so multiples. When people always talk about revenue multiples, what's the multiple of this deal? There's a really healthy correlation that still exists between the multiples and the growth of the business. That correlation is coming down a bit. I think the R squared for the statisticians in the room, I think it was in the 60s, actually in the 70s even in the past. We're in the 50s, so again, not the most statistically sound correlation here, but there is kind of a healthy relationship between the two. I think what's more interesting is the graph this way. What's more interesting is the graph that looks at multiples as a function of profitability plus growth. In the past, and I'd say the last year or so, you ran an R squared, and that line would just look flat. There was almost no correlation between the two, and we're actually starting to see this correlation rebound. So as you think about how your companies potentially get valued, you really start to factor in burn as a function of that growth that you're seeing, because it's going to be more and more prevalent that folks are going to be looking at those types of statistics instead of growth at all costs, which we've been used to in the past. I'll just touch on a couple things here, and I swear there's only one slide, and then we'll go on to the really juicy part, which is the panel discussion. So if you look at key cybersecurity themes in 2022, I feel like I'm preaching to the choir, given the audience here. Cybersecurity spends. The bad guys don't really care that the economy is down. I think I want to say it was Mark Hatfield, I think, a quote that I read that he basically said, they're not going to slow their attacks because there's, turmoil in the public markets. We expect the cybersecurity industry to continue to grow at a really healthy clip. We've seen M&A activity slow down a little bit in the beginning of this year. We kind of expect that to be more of this wait and see period. Will valuations stabilize? Where are we going to land on the other side? And then what we expect to see is what we saw during COVID, a rebound effect where there's going to be a flurry of activity. Unfortunately, some of that activity will be companies that may have raised at valuations that they haven't fully grown into. And this year they're going to see those valuations come down, so they'll start to consider things like M&A and alternative options for the business if they can't raise an up round, or if they can't actually get where they were hoping to get before the markets took a turn. And then I'd say the last comment I'll make on this slide is that there is one area that I think has probably been underinvested for some of the investors here in the room, and also the entrepreneurs that are thinking about kind of what is the big space. But when you look at kind of the wild Web3, I'd say there's a tremendous amount of opportunity in that sector. I won't call it kind of cybersecurity. Richard from Evolution corrected me, and he's right. It's blockchain security, essentially. So when you look at Web3 and you look at the potential in that space, it's greatly, I would say, underserved both by the entrepreneurs and the founders starting companies, but also funds in that sector that are spending time and energy in that space. So just something for you all to keep in mind. And then last slide here, and then I will turn this back over to my friend Yoav. We talked about the public market uncertainty. We talked a little bit about the valuations and the activity. I will say the one thing that I want to mention is, just because you can raise capital at a very high valuation, it doesn't mean you should. You have to think about the impact that capital raise has on the subsequent round that you're raising. You have to think about the impact that it has on your exit possibilities. As the number that you need to achieve on an exit goes up, your universe of buyers actually goes down. So it's something to keep in mind that if you're thinking about it, unless you're going for IPO, in which case it's still a consideration, but maybe less of an influence. I would say to just be mindful when you're raising. Think about that next round. What metrics do your business have to hit to raise that next round? Where do you have to grow with the amount of capital that they're giving you, and factor that into your decision of what kind of valuations you're looking at. And then the last comment, I don't want to be all doom and gloom, is that great companies will thrive under any conditions. If you have strong fundamentals, that there might be a little bit of a return to the metrics. I was having a conversation earlier today, and people are starting to pay more attention to the fundamentals of the business. But if you have a great business, don't listen to Yoav and Ofer and others here. They will fund your companies. They will do it at a fair multiple, at a fair premium, in a fair price. But there's still a tremendous amount of opportunity. Lyle raised the largest seed fund for cybersecurity in the history. Right, we've got new funds coming from Evolution and 1011 and others. So there's a tremendous amount of capital out there, a tremendous amount of opportunity. And I thank all of you for your time. Appreciate the quiet, and I'm going to turn this back over to Lyle and team. So thank you.